Hello and a very warm welcome to this edition of Policy Watch. I am Sana Khan. This week on the show, I welcome Himangshu, What's Energy and Infra Editor with the Economic Times. Welcome to the show, Himangshu. Now, before we start discussing this week's big stories, let's quickly get you a look at the headlines. RBI cuts the repo rate by 25 basis points, the third cut since January. Subbarao says there's little room for another cut. CCEA clears Swedish major IKEA's entry into India. IKEA to invest 10,500 crore rupees, the largest investment in single brand retail since the government eased norms. And a week after Sushil Modi says GST rollout is a possibility, Madhya Pradesh Finance Minister says there's still no consensus. In a move that may not bring any relief to the home and car loan seekers, the RBI cut interest rate by 25 basis points and kept the cash reserve ratio, or the CRR, unchanged. The bank's decision to cut interest for the third time since January as part of the annual credit policy evoked a cautious response from the finance minister, who said, "Let's accept what has been done today," stating that the Reserve Bank of India was becoming overcautious in reading the potential risks to the economy. India Inc. sought bolder intervention from the central bank to boost investments. Let's have a look.
The Reserve Bank of India today lowered the short-term lending rate to 7.25% from 7.5%, the lowest since May 2011, while keeping the cash reserve ratio for banks unchanged at 4%. While unveiling the annual monetary policy, RBI Governor D. Subbarao pegged growth rate for the current fiscal at a conservative level of 5.7%.
This monetary policy cannot afford to lower its guard against the possibility of resurgence of inflation pressures. Monetary policy will also have to remain alert to the risk on account of the large current account deficit and its financing, which could warrant a swift reversal of the policy stance. Overall, the balance of risks stemming from the Reserve Bank's assessment of the growth inflation dynamic yields little space for further monetary easing.
The decision to leave the CRR unchanged seems to have been driven by an improvement in liquidity deficit. The central bank expects inflation to hover broadly around the 5.5% mark in the current fiscal and said it will deploy all instruments at command to bring it down to 5% by March next year.
There is a concern, and we really need to act both on the monetary side and on the supply side in order to be able to bring the inflation down. Therefore, what we really need to do is to get the best out of the investments that we are making.
Accepting the RBI stand on policy rate for what it is, Finance Minister P. Chidambaram expressed hope that declining inflation would increase the scope for rate cut by the central bank.
If the inflation trends down further, that will decide the scope for further policy action. So let's accept what has been done today and let us see what the future holds.
Soon after the policy was announced, bank virtually ruled out slashing their lending cuts, saying the 0.25% cut does not help them bring down their cost of funds, which is at present too high. The Bombay Stock Exchange declined by 160 points or 0.81% following the policy announcement. The RBI projection of 5.7% GDP growth this fiscal drew sharp reaction from Planning Commission Deputy Chairman Montek Singh Ahluwalia, who said the central bank was being more pessimist than the government.
All right, Himangshu, let's start straight away by talking about the RBI's approach. Now, we've seen RBI, being very hawkish. We've seen a hawkish tone from them in the recent past. And now we see this rate cut of 25 basis point. Does that mean that inflation has, finally eased? It's under control? What does it mean, the rate cut?
I think the message from the RBI is that, yes, inflation has come down, but we are not fully convinced that we, need to throw caution to the wind.
Yeah.
Because India has had some very strong structural inflationary trends for 2 or 3 years, for quite some time. And, any kind of pressure in the economics of it all, inflation goes up again. And we are at a bit of a critical stage also. We have the monsoon coming from June.
Yeah.
Now, that's a very, very vital influence on food prices, and which is where inflation really matters. So I think the message, and I won't use the term hawkish or dove or anything, I think it's a pretty practical message that the direction is clear. We'd like to cut rates further, but not at the risk of inflation going up again.
All right. So here by easing of the interest rate and then also at the same time warning that there is headroom for more. Remember, there was a warning. It seems that Subba Rao has in a way put the onus back on the government, so to speak. Do you think that?
Yeah, if you're managing the economy and inflation, monetary policy is only one leg of the two where it stands. So he's trying to say that as far as monetary policy is concerned, we have taken some steps, and I think this is the third time since January you had a 25 basis point cut. The other side is the supply side. The moment interest rates come down, the industry would like to invest. Now, is the investment climate good enough in the other sense? Are they able to invest, get the clearances, go ahead and deliver? So that is very important. I think it's a very simple message that don't think just by monetary measures, it's not a button you press and inflation goes up or down. So he's saying the policy response, the implementation, the overall investment environment, that's also important.
And then to that, what would you say to the finance minister's response? He said that, okay, let's see what's happening today and we'll see, how things shape up tomorrow. What do you think is going on in his head right now?
See, he would obviously, he wants economic growth to pick up. And for growth to pick up, what the message for the industry, from the industry is that you please bring it down, bring the rates down further. So his hope is that growth will pick up. More than that, actually, that in the next round there will be a further cut.
Okay.
He would of course be impatient that he's taken so many steps from the time he's become finance minister, and if that combines with a better interest rate regime.
Yes.
So I think there's a bit of an impatience in him that please do it quickly. Yeah. But as an economist and as a politician who's also equally sensitive to inflation, he appreciates the other side also.
Right. Now, some people would say, some economists have actually said that the noises that Subba Rao is making, despite those, there might be still room for a further rate cut. Do you think we are looking at rate cuts, or is it just too soon to talk about that right now?
See, normally RBI may consider this again after, say, 6 weeks. So there is room. In 6 weeks, you'll get a new set of data. What are the inflationary trends? In 6 weeks, you will have a very clear picture of how the monsoon is going to be. It normally comes in June, and June is a very critical month when you do the planting and everything. Yeah. Last year you had eventually a normal monsoon, but June was very bad, and finally the food production is 5 million tons down. So in another 6 weeks, you'll have a much clearer picture. There are already a few good things happening on the policy side, in terms of investment decisions and announcements. So there is room, but he's just being cautious that don't take this for granted, that the direction has been set and we'll keep cutting every time we meet. So.
Right. So the biggest challenge as of now is also the current account deficit. Where does that figure in the scheme of things when we see this rate cut over here?
See, the environment is looking better. See, one of the two big things that lead to a bad current account deficit. One is oil imports, and the other is gold imports. Gold is a little more tragic in terms of the economy because it's not a very productive thing. People just buy gold and hold it at home. As far as oil is concerned, Brent crude price, which is the international benchmark, that has remained below 100 for a long time. It's gone up a bit again, 102, 103, and I think last was almost 104. But even that is reasonably good. And the other good thing that's been happening is diesel prices in India have been gradually increased. So that's sound economics. Oil import bill, say last month, would certainly be lower because of this. Then when it comes to gold, that is another part of what the RBI announced yesterday. There are going to be some restrictions on lending against gold coins. And the broad interpretation of that from people in the trade and analysts is that that's going to discourage too much imports, and it might encourage recycling of locked up gold in households coming back to the market. So all these are good things for the current account deficit. And to that extent, I think if these things deliver results, he'll have more room to cut rates again.
Right. Now, we're talking about RBI cutting down rates. Do we hope banks will also follow suit? They have indicated, Subba Rao has indicated that banks might just follow suit. Will banks now lower their rates?
Perhaps not immediately, but they would. I'm sure they would, because they also have a competitive space. When it comes to home loans, even before this rate cut, there was a lot of advertising by a particular bank that we are offering this rate. So once the RBI cuts the basic rate, I think there is more room. But obviously, they won't cut it down as quickly and promptly as they raise it when the interest rate regime goes up. So.
All right.
Yeah.
All right. So that's that about the RBI's policy. But there's still two more top stories that are lined up for the show, and we'll be taking a very short break. Come back right after this break. We'll be discussing lots more. Welcome back. Now, the Cabinet Committee on Economic Affairs, headed by the Prime Minister, has approved the setting up of an exchange-traded fund by disinvestment in PSUs. The government also allowed Swedish furniture major IKEA to invest 10,500 crore rupees for setting up single-brand retail stores to sell mostly home furnishing items. Now, IKEA has proposed setting up 10 furnishing and homeware stores as well as allied infrastructure in over 10 years. The IKEA proposal was earlier cleared by the Foreign Investment Promotion Board, or the FIPB, but since the proposed investment was more than 1,200 crore rupees, the CCA's approval was needed. As of now, IKEA's will be the largest investor in a single brand retailing ever since the government allowed foreign investment in this particular sector. Now, Himangshu, IKEA has been wanting to come in India for a long time, and now a nod has been given, but there were some problems and superficial ones at that. Could you highlight some of those for us?
You see, there were certain specific issues in IKEA's proposal, and it was by and large known that that would not be a problem. As far as these foreign companies are concerned, particularly IKEA, their main concern was the broader policy, which, since the end of last year has been liberalized to a lot of large extent. And I think these foreign companies were waiting to see what is the political reaction to that. There were initial, bit of chest thumping and noise. And now around 5-6 months have passed. So they're coming up with proposals. There was some to and fro between the company proposing and the ministry. And I think most of the issues have been sorted out.
There were issues like the cafeteria. They wanted cafeterias, and then they weren't getting the nod. The government, however, has stuck to the condition that sourcing done by IKEA for its global operations cannot be counted towards that 30% mandatory sourcing under single brand retailing. That's a rider, really, that IKEA will have to live with if it has to come to India with that much more of an investment.
See, for a foreign company, ideally they would like it their way, but given the size of the Indian market and the fact that their core markets in the West are not growing and many of them are shrinking, so they would be actually quite happy with.
So you're saying it wouldn't really bother IKEA that much, this rider?
Not that much, because what a foreign investor would like to do in the retail space just now is to first get your foothold here, establish yourself, become one of the key players, and then, like many other Indian companies, they can also lobby for changes in policy later on.
Right.
So that will be a small cost for them to pay to be able to set up a huge operation in India.
It might just work out well for IKEA, as we've already seen a lot of people getting furniture of IKEA because it's cheaper as well. Now, do you believe this green light is going to encourage other single, brand retailers to push their proposals, come to India? Obviously, that seems to be like a good possibility.
I think it certainly would. Because the market is equally attractive for any other retailer as this one. And, they would have noted that after this approval, there hasn't been much of a political noise or, why is this huge company coming and the mom and pop stores will close down. Nothing like that sort has happened. And, there would also be, acceptance of the fact that a big brand retail, contrary to various perception, it does help bring down prices of and offer quality products. It also benefits, the state government, the states where they're located, because they are much more transparent in terms of the local taxes are concerned, unlike these small shops.
Yes.
So maybe if you would like to watch the experience, how it goes, but certainly, you can expect more of them to come in this huge market.
And that's certainly good news. Now, IKEA coming to India will be a big boost for the MSME sector as well in a big way. Do you think MSMEs have a chance of integrating them to this global chain now?
See, this will give them a lot of exposure to do business with a company like that. It will also be a challenge because, these companies are very, very stringent in their quality requirements. That, you can't go wrong a millimeter or,
an inch there,
inch there, or even if, it's something like an egg product to give a different example, they will want the same color of the yolk. They want to
Yeah.
make sure what the hen is eating.
Yeah.
So they're very big sticklers for quality. So which is very good because India's small and medium sector has not had much exposure to quality demands, and they would also be dealing with a big buyer. A big buyer, the negotiating strength is then with the buyer. So, I think it will separate the men from the boys in that sector.
Right. So IKEA not only will help refurnish homes back in India, but also the sector as such. Let's hope that all works out really well. We're taking another very short break on Policy Watch. Our last story is coming up in just a bit. Don't go anywhere. You're watching Policy Watch. A very crucial tax reform to have a common goods and services tax across the country is stuck from the past several years due to lack of consensus between the centre and states. It was to come into effect from April 2010 but has been delayed by more than 3 years now. Once implemented, the GST will replace most of the indirect sales and service taxes at centre and state levels. Recently, Bihar Deputy Chief Minister Sushil Modi, who heads the joint panel of centre and states for implementation of GST, expressed hope of its early implementation. He said that 80% of the issues had been sorted out and GST could be implemented within 6 months' time if the centre agrees to compensate states for 5 years for any revenue loss suffered by them. Now, despite these positive signals, the implementation of GST requires extraordinary political consensus between UPA and the opposition parties. It requires a constitutional amendment bill to be passed by the parliament with 2/3 majority. Parliamentary Standing Committee on Finance, that is headed by BJP leader Yashwant Sinha, is expected to give its recommendations in some time, and after that perhaps the government will have to reconsider it and move a constitutional amendment bill in Parliament. However, recent political development, particularly the deadlock in Parliament, does not inspire confidence about the ability of these political parties to set aside their differences to pave way for this important tax reform. Sushil Modi has suggested calling an all-party meet as well to arrive at a consensus. However, even then the matter cannot be taken up in Parliament before the monsoon session. So talking about this, Himangshu, Modi has said what we've been talking for a while now, that the GST is rolling out, it's rolling out, it's rolling out, but just not there yet.
Yeah, I mean, as your report said, that, this requires a constitutional amendment. There are concerns about, where will the revenue go, what will the states lose, what will they get. I'm reminded a bit about when the value-added tax was introduced. There were similar concerns, and there were 4 or 5 states which, stayed away from it. But the benefit was so much for the states, they all joined in.
Came on board.
Here also, there's a similar kind of negotiation and concern. And, I will not read too much into this delay since 2010 because, the political climate and the way the parliament has functioned or actually not functioned, there's lots of other things in the agenda of both the ruling party as well as the opposition. This was certainly not number one. So my personal view is that whenever the political parties, decide, okay, this has to be done, I don't think there's,
So
it's too good a tax reform to be ignored.
Then this is just a procedural delay at this point, and
it's a procedural
once
delay
these hurdles will
and
be crossed.
an issue of priorities, when you really want to get it done. I mean,
Okay. Let me also quote Raghav Ji, the Madhya Pradesh Finance Minister and Modi's BJP colleague, who said that the rollout of GST is nowhere close. So we hear one BJP man saying that 80% of it is done, wait, it's just rolling out, and the other, his colleague, saying that it's nowhere in sight, it's just not happening. What could be the reason?
Well, see, State Chief Minister is under pressure from his own constituency. Now, I really do not know the details, but to some extent, till it is 100% done, it is not done. So
Yeah.
whether it is 80%, 70%,
That ambiguity is there, and we can see
that
it.
ambiguity is there. And then there would be vested interest in certain states which would be against it because, whenever a very good tax reform or any good reform is to be implemented, there are certain inefficient vested interests which would not want it, which would be, on the benefit side of the old system. But on the whole, if you see even the opposition party leadership, there have not been too strong noises against this rollout.
Yeah.
So on the balance, I remain positive. Politicians, of course, they make statements.
So do we expect the GST rolling out before elections then next year, the general elections? Strong possibility or no?
I would say a probability, not a strong possibility, because once again, supposing elections are announced at a particular stage, then after that, constitutional amendment, of course, can be ruled out. You have a caretaker government. Within that, before that, the antagonism between the ruling and the opposition party, whichever the parties are, is at a high. You will not expect much cooperation from them with each other. But I think, next year the general elections are due. Some say they might happen a bit earlier. So whichever is the new government that come, for them it will be a very, very strong incentive to do some, a solid reform in the first year of their government. Right. And that's my expectation.
All right, Himangshu. So we have today talked about RBI slashing interest rates, cutting down the interest rate by 25 basis points. Then we talked about IKEA now coming into the Indian market. Good news there. And the GST rollout, which still, as Himangshu said, is a probability, maybe perhaps rolling out just before the general elections. That's all the time we have in this week's edition of Policy Watch. I once again would like to thank Himangshu Watts for joining me on the show. Thanks, Himangshu. That's me, Sana Khan, signing out then. Bye-bye.